take no loss. I don't even know what it costs. I hit the ground, then I go off. Yeah, hit the ground, then I go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then I go off. Yeah, hit the ground, then I go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
All right, everybody. Good morning. Welcome to the morning show here on Stock Market TV. We got the crew, me, Steve, AC, Alfonso. A lot going on today. Let's see what's on my dock. Taiwan Semi is on my dock today, up about 9-10% this morning. Good report from them. We'll talk about that, and I don't really know what's on Steve and JC's radar, so we'll see. How about that? We'll have Mr. Glick join us as always. One of the highlights of my day. That'll be around 8:55. We'll have Craig Johnson on this show from Piper Sandler. He'll be on at 9, and Sean McLaughlin on at around 9:30. That is the plan. What up, chat? Let's get the show on the road, shall we? Yeah, let's do that.
All right, ladies and gentlemen, we are back. Happy Thursday.
Good morning.
Oh, it is a great morning. It really is such a great morning. I love the fall. Can we just talk about it? The fall, full market. Strazza's got his cats. His house did not get destroyed by any of these storms yet. We're still in October.
It's my favorite time of year up where you are, and it's the worst time of year, as you know, down where I am.
Oh, I'm fully aware.
So fall's always tough for me.
Yeah. But you're a few weeks away. You're about a month away from the promised land. And then you got 3, 4, 5 of the best months of the year. Very, very happy for you there, Mr. Strazza. See, Strazza likes to go to the Northeast in the winter. He likes to spend hurricane season in South Florida. You know, a lot of people like to do the opposite of that. I would encourage you to give that some thought moving forward. Mr. Spencer Israel, shall we get into the market, please? I think we should.
All right.
Bow, bow, bow. We've got the Dow futures up 80 points this morning. That's 43,420 for those who partake. New all-time highs for the Dow. S&P 500 up 50 basis points. Above 5,900, Mr. Steve Strazza. I repeat, the S&P 500 futures above 5,900. I'm no math major, but 6,000 is approaching pretty quickly. And then we got the NASDAQ 100 futures up almost a full percent, 20,005 1/4. 30-year bond futures down about 0.5% to 120 and change. Crude oil up 0.5% at 70. Copper down 0.75%, 433. Gold flat, just under 2,700. Silver flat, just under 32. With the volatility index just slightly under 20, very elevated. In my opinion, that continues to be a tailwind for equities. And in funny money land, Bitcoin just under 67,000, down 1% on the day. Ethereum flat at 2,600. Solana 152, down 1.5%. Binance 590, down 1.5%. Total crypto market cap, Spencer Israel, 2.25 trillion, with the Bitcoin dominance continuing to move higher, pushing 59% for Bitcoin dominance, despite the strength in crypto. I find that very interesting, Mr. Strazza. Any thoughts?
Yeah, there can't be too much strength in crypto. Internals can't be too good if Bitcoin dominance keeps moving higher, I think, during bull markets.
No, I don't think that's right. Because think about it like this.
Markets, Bitcoin dominance goes down.
Hold on. Settle down, Beavis.
It's true.
Think about it like this. Bitcoin represents essentially 60% of the entire crypto markets.
Mm-hmm.
So all Bitcoin needs to do is move a little bit, and it eats into that. Down the cap scale, these $500 million, $1 billion tokens, they can go up 50%. They're not going to make much of a dent in that $2.25 trillion in market capitalization. But so when you look at the Bitcoin dominance increasing, the initial gut instinct is that Bitcoin is absolutely dominating and outperforming. But we have the data, and we know that simply isn't the case at all. There are a lot of altcoins that are showing relative strength compared to Bitcoin.
Dude, No, some altcoins are like up off the lows a little bit. There's literally one altcoin that looks good and is like breaking out, and that's Sui. Like there's one. It's not true. Here's the problem. The past couple of cycles, that line was always moving down and to the right during the bull markets.
All
right?
those cycles we've had from the past.
I'm just saying this one would be different in that way.
I guess we'll see. I don't necessarily think it's a bad thing that Bitcoin is dominating in market capitalization. I wouldn't say it's a good thing either. It's just what it is. It's kind of how I see it. You? Is it bad or good or indifferent? I'm indifferent about it.
No, I think eventually there's going to come a time where 90% of these altcoins go to zero, and I don't think you want to look at market.
Didn't they already do that? Isn't that what they do?
Not yet. You don't want to look at market internals in the crypto market in the same way that you look at market internals in the stock market. You're going to have like a NASDAQ composite situation eventually, right? So
that's
maybe,
exactly right.
But
I'll give you that one.
But the past couple bull markets were characterized by fantastic participation from the altcoins. So
I want to address Yasul's shitcoins are a scam. No, yeah, some of them are. Just like some stocks are scams, right? It's no different. Yeah. Yes.
A lot of them are scams. Yeah.
Some shitcoins are scams. A lot of them are scams. Some stocks are scams. A lot of them are scams. That's always been the case. It will always be the case. If you don't like it, tough shit. All right, I want to talk about something important.
Yeah.
Slide 2, please, Mr. Spencer. Israel. We are looking at the advanced decline line of the stocks that trade on the world's most important stock exchange. World's most important stock exchange. No arguments. We can go back and forth about perhaps what the most important index might be, the Dow, the S&P. We can do that song and dance. That's not what we're talking about.
Is this
most
bearish?
Important stock exchange in the world, New York Stock Exchange. No arguments, right? Nobody's going to argue with me, right? These are the stocks that trade on that exchange, you see. And about 40% of the largest 100 components are not even from the United States of America. So the New York Stock Exchange is really Earthling Exchange. Earth Exchange is really what it should be referred to as. And we are at the highest levels in history, Mr. Strazza. Is this historically bearish?
This, from my understanding, is full bull.
Yeah. This is, and then by the way, you've got small cap stocks, you've got mid cap stocks, you've got large cap stocks, you've got international stocks. You don't have closed-end funds, you don't have fixed income products. This is common stocks only, and it is hitting new all-time highs. So I was looking at it over the last week or two when we saw the S&P making new highs and the advanced decline line had not yet.
Mm-hmm.
Well, here you go.
No, this is a great chart.
This one's for you. This one's for you because you've been all over this speculative tech, all over it. And a lot of these are down the cap scale. Spencer Israel, that is your cue to go to the next chart.
So you like the spec tech?
What do you think is going on here, Mr. Strazza? New multi-year highs for both the Russell 2000 small caps and the S&P 600 index. The only difference is the S&P 600 requires a track record of earnings in order to be included, and the Russell 2000 doesn't discriminate like that. Everyone's included. It's just a market cap situation, making new multi-year highs as we speak.
Yeah, you want to use these two, like looking at the S&P and the Dow or the S&P and the NASDAQ 100 for confirmation in the large cap world. They're built differently. They're both fine. They both give us information, albeit maybe slightly different information. But this is what these kinds of indexes are starting to look like. The IPO index looks this way. You could look at the growth or the value indexes, IWO, IWN. Value, I don't know, 1 day away from looking like that. Growth already breaking out. You can pull up like an ARC W or an ARC F. And it looks a lot like this.
I like how Rachel says they look identical. Yes, Rachel, there's a good reason for that. It's because nobody gives a shit about the fundamentals. It doesn't matter. The black line has all the fundamentals and the earnings, and the blue line has none of that stuff. It's all fugazi, and they look exactly the same. It's a it's very good of you to observe. Very nice observation there, Rachel. Samesies. This, regardless of how much money one group is losing versus the other one and how much money they claim to be making, right?
So you know what else looks like this? It's going to make too much sense for you.
Regional banks.
The first chart. you see what's going on here? Are we ready for this discussion this morning?
I was
a week
born ready.
for the
Give it to me. Give it to
What
me,
a-
Spencer. Give it to me good.
What
Thank
a
you,
week.
sir.
Woo. We're gonna do a special report on the bank earnings because they're just that good right now.
I'll do you one better. I'll
What?
do you one better. So that's regional banks making new highs. Throw up slide 5, please. Throw up slide 5. I don't mean to one up you, Strazza, but this will just reiterate what's happening here.
Good luck.
Who is the best performing small cap sector of the year?
Banks. PSCF, banks. This is a bank story right now. It's true.
I don't want to be like a topper, you know those people that always like, you tell someone a story, they have a better one, But in this case, like, I think you'll admit this is a pretty good one. Pretty good chart there.
Can we talk about the banks? You
Please.
ready? You ready for it?
Give it to me.
Friday. Where are you, Spencer? Spencer told us all Friday that Wells Fargo's report was no good. No good, right? Mixed at best.
I compared to the other ones, yeah.
And you say stocks got to go down. Look at the Wells Fargo chart since 1, 2, 3, 4, 5 straight up days going on 5.
You sound like the Count from Sesame Street. A whoa.
So that gap, 5.6% on earnings day, didn't even come close to being filled. Instead, it just ripped right out to new highs, breaking out of this range. If we have Wells Fargo, let's show it, because Wells Fargo is just a beautiful example, or a really nice illustration, kicking it off the first day of earnings. This is kind of the story right now. There's a very low bar for these companies. Their environment is improving. Their balance sheet issues are being all but shored up thanks to the bond market and interest rates, right? So things are really turning for the banks. The good ones have already been beating and doing well. All of the regionals now are just coming out in such a big way. Did you see Bank of New York, is a little bit different, probably more of an investment bank, but US Bank Corp, one of the super regionals, USB, you have a range that literally lasts all year since last December, just broke out. Earnings right now is the catalyst to break out all of these regional bank charts. And if you go back to the last quarter, early July, second week of July, saw the same exact thing. Go back and look at the price action in the bank in July. The reactions were incredible, right? We got excited about the regional banks 3 months ago when earnings started hitting. Then they all pinged straight sideways for the rest of the quarter, consolidating and digesting those gains. Now earnings, I think, is going to be the catalyst to break these charts out again. Do we have any bank earnings today? I know we do.
I'll do you one better. They should think about this. They should turn these into like ice cream parlors and Checkers. Anybody like Checkers? I freaking love Checkers.
They're Starbucks, but yeah, I would prefer if they were McDonald's.
Think about this.
They're like cafes.
Could you imagine? I don't know when the last time you walked into a bank was, but it is one of the most depressing places of all time. The people that are going to these banks don't want to be there. The people that are working at these banks want to blow their brains out. Like, it is one of the most depressing scenes you'll ever see in your life. Like going to a bank branch. Could you imagine? So finally they're shutting these things down, as they should. It's about time. Get rid of all of them. It's
going on
horrible. Forever. It's so depressing. Just for the mental health of humanity, get rid of these things.
I will say a bank is like most things. You don't need it until you need it, right? Like I had to go to a bank to get a cashier's check. Like, I don't know.
The blockchain fixes all this, Spencer.
A year and a half ago or something. I don't remember.
Does the blockchain not fix this?
What does this do to the real estate market in the long run is what's really interesting to me, because you can't put a data center on Greenwich Avenue. So like, who takes these properties?
Kava,
right?
Chipotle, Burger King.
How many Kavas and Chipotles can you have? You know what I mean?
I got to tell you, the Dunkin' Donuts by me is beautiful. Like, it was 100% used to be an old bank. Like this Dunkin' Donuts is like gorgeous. So that must have been a bank, and they turned it into a Dunkin' Donuts, and it's great. It's a lovely experience. Get my coffee, get some bagels for the kids, little extra bacon.
Listen, we already have a lot of fast food restaurants everywhere. And if all of the bank branches just turn into more fast food restaurants, I don't know if that works.
All right. I got 2 more charts for you guys. Slide 7. You ready for this? You ready for this? You ready? The anticipation. Oh, baby, you got what I need.
Mhm.
And you say he's just a friend. And you say he's just a friend. Oh, baby, you.
Why are you giving all our trades away?
We're not giving the trade away. I just am fascinated. You know how I love seeing like stocks in the wild? You know, I go to Canada, I see ADRs everywhere, right?
Yeah.
I like seeing things that I know of in the real world in the stock market,
Uh-huh.
right? So this is a real piece of hot garbage, right?
No.
And has saved me plenty of time at Newark Airport when I've been stuck having to go through Newark, New Jersey, which is lovely this time of year. This is the clear 30% short interest, 7 days to cover, new multi-year highs.
So we also had one in the not the hot corner, 2 to 100. It's the machines. It starts with an L, and it's God, you guys would know it. Leidos. It's airport stocks are hot. I remember when LDOS came out of 2 to 100 last year and was breaking out of that range. This is another one. Shout out airports. Airports over airlines.
What about the next one? So this is clear is technically software. And here we are looking at the software index, making new all-time highs, highest levels ever for software. I'm pretty sure it was a one Steven Strazza who once said that these software stocks are the best stocks, or are they the most important stocks?
The best businesses. Best businesses.
Best businesses.
You always get it wrong. Best businesses, not the most important. Best.
What does it look like? One of those William O'Neill cup and handle situations? Maybe.
Sure does.
Sure does. Rest in peace, William O'Neill. Rest in peace, Biz Markie.
So
two legends, Biz Markie and William O'Neill. The fact that I could group those two in the same sentence, that's pretty fantastic right there. That's worth the price of admission alone. Shout out Biz Markie. Shout out William O'Neill. Shout out software stocks. It's just math, right?
Dude, tech is starting to look fantastic again. There was so much digestion here, especially in the large cap technology space. Just so much sideways for the last 6, 7, 8 months, depending on where you look. All of a sudden, these ranges are going. I think this is one of the most obvious trades to make right now into year end. Right, you want to buy any of these prolonged ranges that are going, and you could do it in a riskier way. You could do it in a less risky way. I think this is probably a far less risky way than doing something like ARC. They'll probably work together, but these are the trades right now. Cybersecurity looks like this. Cloud looks like this. Internet looks like this. Right.
How about throw up a new slide 2, Spencer, please? It's a good one.
New slide 2. That's on the bingo card.
Haha, nice.
Yeah, like we're singing out here. We're dancing. Must be a bull market, JC.
Equally weighted technology making new all-time highs. Throw up the new slide 2. New.
These nuclear stocks, man, just so good.
So we got, and then go to new slide 2. Throw all of them. Give it to him, Spencer.
What's going on?
Thank you, sir. May I have another?
Oh well.
All right. So this roll through the first 3 slides. So here's small cap technology. Does that look bearish to you, Strazza?
Yep. That's the same pattern.
Does that look like a multi-year basing pattern and healthy consolidation in the midst of a long-term secular uptrend? Is that what this looks like? Or does this look like a massive top and is about to come crumbling down and bring the entire stock market and the economy with it?
No, sir. You want to overlay this with the IGV that you just showed us, and IGV is paving the way for PSCT. That's the path.
Next one, Mr. Spencer, just go back. Equally weighted technology. These are large caps, all-time highs. So by definition, can't be only 7 stocks.
Oh,
And then the last one there, Spencer.
Stop with that now, silly.
What?
People stopped saying that a long time ago.
Stop saying what?
7 stocks.
Oh, no. I'm just reiterating that mathematically it can't be the mid caps. Did I just delete the mid caps?
A lot of math lessons from JC today. Explaining
A lot of math
Bitcoin
lessons.
dominance. Yeah. Counting 7 stocks.
I got to tell you, like, it's easy to say, like, at the time, like, how good it is to count and stuff like that. But, like, as someone who actually takes the time to count and has been counting this entire bull market since the end of the last bear market, man, I got to tell you, counting is like a cheat
Counting
code.
is
Because think about all these serial killers. Think about what a serial killer, what sort of like mentally challenged individual you have to be to suggest that this is not a bull market and it's only a bear market rally because the small cap stocks are having a hard time keeping up with the biggest and best stocks in the world. Like, think about
better.
the problems that you have to have in your mind to think that that is even remotely close to being true.
It's one problem. It's the same problem for all of these people. If at this point they're still talking, bear porn to you, it's not because they can't count, JC. It's because they don't want to admit how wrong they've been and for how long they've been wrong.
These are horrible humans. They are terrible, terrible, terrible people. And I don't need to call anybody out, but you guys knock yourselves out. Tell them how terrible they are. They deserved it.
Can we
bring in a one Kenny Glick? Probably my favorite person these days, Kenny Glick.
Do that.
I've always been a fan of Kenny, but he's absolutely on fire. The Andy Dufresne pattern is one of my favorite patterns of all time. The faux show bro. And yesterday, I may have improved on the faux show bro. We now have the FOMO show bro. FOMO show bro. Wow.
Let's talk.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Say it with me.
Hey.
I've been up since like 1:40 this morning. I'm kind of hallucinating now, so.
What are you doing at 1 o'clock in the morning?
I don't know. My dog was having some sort of nightmare. He woke me up. I'm a very light sleeper. We now let the dog sleep in our room, which for 8 years we never did. And he snores. He has these nightmares. He's like whimpering, and I'm just up. And next thing you know, I saw the futures ripping through multi-day VWAP. So I'm in.
I absolutely love it. Mr. Kenny Glick.
Hello.
I love the fact that Kenny Glick has a nickname for everything, usually more than one.
Yeah.
But calling the VWAP the money line is beneath his line. That's just odd. It is the money line. It is the line that makes the money, takes money away. The VWAP is the money line, Kenny. Embrace it, baby.
I appreciate it's the money line, but you know what? I don't want to disrespect the VWAP. He's my lord and master.
You're disrespecting everything else. It's all good. You're good, right? I mean,
what are you
not disrespecting these days?
We can sing a song about it because we got the song. We got to get Giancarlo to record me doing the 1 minute multi-day VWAP reversal song to the tune of 10 Little Indians. We haven't sang that song. We almost got it today. But I want to show you something gorgeous.
Right? Like that?
Exactly. 1 minute multi-day VWAP reversal. The 1 minute multi-day VWAP reversal. 1 minute multi-day VWAP reversal. The only trade you ever have to take. Everybody! All right, let's get into it. You want to see So my new friends that showed up this morning, I've been rip-roaring since like 6 in the morning. I'm on my 13th cup of coffee. So Alcoa, baby, I gave it to you 3 weeks ago. I told you it was coming out of the Andy Dufresne pattern. Let's go back to the Andy Dufresne. Here's Andy Dufresne.
Explain to the folks the Andy Dufresne pattern and why it's so important and why I'm such a huge fan of this Dufresne pattern.
The Andy Dufresne is generally, I'm looking at a 3-year weekly VWAP trade. And that's kind of where I found my AMD at $250 back in the day, the Carvana at $12. You know, most of these good names, you know, stocks, I'm not gonna say good names, doesn't matter what stock it is, but when they wallow through the muck and they're just sitting there and everybody's forgetting about it, Andy Dufresne's trying to work his way through that tunnel and they come out and they run for glory into the rain. So when they make that turn, they generally go a lot more, kind of like why we're loving this PayPal coming out of the Andy Dufresne. You know, you got the Clove came out of the Andy Dufresne. So, you know, Alcoa was coming out of Andy Dufresne a couple of weeks ago. And I was like, hey, let's get involved. And here we are. And now we go back to what we're witnessing right now. And we play the fade, because if you ain't fading, you ain't trading. So if you bought the stock 3 weeks ago and you came in, you said, hey, I'm a winner and I need to sell to take my profit, right? So when do they take the profits? Chicka, chicka, ching. There's the money line. The money line's telling you, hey, so you got the idea. And again, this is a validation tool. So I like VWAP in so many different ways. So if you came in looking to play the fade, right? So you got that idea, you have an inkling or a notion or an idea, let VWAP validate your idea, and within 15 or 20 minutes of it rolling over, bang, 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 and then where does it go? It just hit the multi-day right there, and you actually did get the reversal, and now you're just flirting around. So blue line to orange line is the way, and it's absolutely amazing. And again, I'm glad some new guys were showing up today, because I was showing them how you use this multiple time frame VWAP, because that gives you the target and also shows you the risk. So if you're shorting something at 44.62, you're using the top of the day as your high. You're not going to let it go back above pre-market highs. There's the short. There's your target way down there. So you're risking more or less 40 cents to possibly make $2. Let's go. So right now, you know, that one worked. And now we're looking at Taiwan Semi. I'm super bullish the semis. I love chips. I made my bones in the semiconductor industry. We're just having this conversation. Robertson Stevens, 1996, we're talking about. A buddy of mine, we called him the scientist. He was a semiconductor scientist. He told me how flash memory was going to change the game. SNDK, if you guys remember, going back when AMAT was the king of all semis. He was giving me buyouts. Taiwan Semiconductor, Cirrus Logic, always my favorite stocks. But again, when you come in and you see these stocks gapped up, huge, you got to think there's going to be somebody that wants to take these profits. So this was just a little range break, and we're just looking for reversion to the VWAP. It's a struggle. It doesn't want to go down, but it's trying. So right now we shorted a little bit, covered it on this turn because it got me a little bit nervous because it broke right back above where I shorted it. But if it rolls and breaks this VWAP, we're looking for a little pullback to about, 201.50. And if it breaks 201.50, multi-day VWAP's down at 190. I do not expect this one to roll. But again, it's not about what I expect. I sit here and I wait. If it starts to roll, then I short it and I use those prior highs as my stop. Every trade we do is defined. And, again, that's what we do.
Give me one more name on the move this morning, Kenny.
You want to see one that's on the move? Something going on with the XE stock. So Nixie, come on, people. We were doing this one a little while ago. You got the foe, you got your show, and then you got your Kardashian bottom. I don't know what this one is. I don't care. We're in it. We're out of it. Here's the VWAP break. We just happen to be watching this one. It went under the VWAP, and there's the turn. $8 break, VWAP break. And I told everybody, wait to see it get back to the 971. If it gets to 1063, you want to sell it. You shot above it. And as I warn everybody each morning, these are the ones when they roll over and die. Please don't hold these overnight because generally they're going to go back to zero. I don't know what these names are. There's 2 or 3 of them every day, like the drug stock, like NTEC, whatever the hell that was. So Nixie and then Pixie, Pixy. And if you don't think there's a coincidence here, I mean, the names of the stocks rhyme. That's probably why they're both moving. That's how stupid these stocks are. But again, this one, Same exact trade. Back above the VWAP, blasts off for a couple of points, and then rolls and dies. Most likely these stocks are going to go back to where they came from. Be cautious. And that's why I do this stuff live, and I'm there to guide you through the wonderful world of Nixies and Pixies and Alcoas and Taiwan Semiconductors. And I'm probably going to be sleeping by 10:30.
I got to tell you, Kenny, I really enjoyed the event that we put on yesterday.
Yeah,
I've known
thanks
you
for
for a
doing
long
that. I like
time,
that.
and
I appreciate
we've
it.
done some videos together over the years. But yesterday was pretty freaking awesome, man.
Thanks. Yeah, thank you very much. That was good. I like doing
Mary
it live.
called me afterwards. It was like, wow, that was awesome. Everybody loved it. That was great. Seriously.
Nice. Let's do more.
We should. We will. But folks, yesterday, seriously, like, no bullshit. It was awesome. If you're interested in figuring out, how to get the fastest moving companies every single day, right, without having to do any of the work, Kenny does it for you. If you're interested in understanding the way VWAP works, if you want some important trading concepts reiterated to you, very, very important ones, yesterday was awesome. And not to mention that pretty much everything Kenny was talking about can be applied on multiple time frames. I mean, you were really talking my book, Kenny, on a more intraday basis, of course, but all the principles you were talking about were the same principles that, we're using in charts going back decades, going back months, going back years, and you're looking at it intraday. Loved it.
Yeah,
Loved
absolutely.
everything about it.
If you could master the day, then you could bring it to any time frame. And before I go, let me just show you. We were talking about, somebody asked me, can I use it on ETFs and futures? This is why I've been up all night. So here's the futures. And again, in a market that generally doesn't want to go down, again, you don't have to take my word for it. Look at any chart. This market does not want to go down. So when you see the futures down 60, 70 points last night, you kind of have to laugh and say, that's not going to last. And even if it does, okay, great. Today, that would be the day it's going down. Here's the 1 minute. There's the faux show 1 minute multi-day VWAP reversal. Faux show, bro. So this is a futures contract right there. This is what I was in. I wish I had some more. Again, I usually just do 1 or 2 contracts when I can't sleep. And next thing you know, you got yourself a 150-point move, and you're already tacking on another 60 right here. It all starts with a 1 minute multi-day VWAP reversal. Works on futures, works on ETFs, works on everything as long as there's volume. All right, my friends, good luck. I'll see you in the room.
Kenny Glick, the grandfather of day trading, ladies and gentlemen. Nobody has been day trading longer than Kenny. You know why? Because day trading did not exist before Kenny was trading. So it's fun fact. The grandfather of day trading, folks.
That's how old he is. The link is on the screen via QR code. Is also in the chat and description. If you want to catch the replay of that stream yesterday, I recommend you do as well. All right. We've got Mr. Craig Johnson in the house, JC.
Love it.
Shall we get him on here? All right.
Yo, Jay, we've been for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Craig Johnson in the house.
JC, how are you?
Couldn't be better, my friend. It's a bull market. It's the fall. It's football season. The Miami Hurricanes are 6th in the country. Life is good. Life is good.
You are correct. It is a bull market. We just hit the second anniversary of the bull market off the October lows of 22. I don't think a lot of people fully realize that, JC, just how fantastic some of these stocks have been coming off of the lows.
Let me ask you this. You mentioned that we just hit the 2-year anniversary off the October of 2022 lows.
Correct.
In things like the S&P 500, for example. But we know that the new lows list peaked in June of that year. Mm-hmm. And by the time the S&P 500 finally made its ultimate lows in the fourth quarter of 22, the majority of stocks were already heading up. Those internals led the way. And if investors just took the time to actually go and count, they would have not been fighting that uptrend the whole time like so many did. As somebody who does as much breath work as you do, you and I have gone down that rabbit hole in real time at various points in prior cycles, debated, argued, agreed, the whole thing. So I know for a fact that you know your shit. Tell me a little bit about that period and what investors could have done so that they didn't get their faces ripped off in 23 and beyond, and they could have just looked at what was happening at the time.
Well, this is where I'd like to come back and I say trust the thrust, right? Because when you get these sort of breath thrusts and you get these improvements, a lot of people have ignored them over the years. And I think you just cannot ignore them. I mean, one of the things that I have been kind of putting in our monthly publications and stuff for quite some time now is I go through and I look at a chart of every single stock above a 25 million market cap at a $2 price. And when I do that, the most unbelievable thing that I'm seeing right now is with that index of over 4,000 companies.
Hold on, Craig. Is that just in America or that's global?
That's just in the United States.
So just American companies above $2 per share, above $25 million in market capitalization. Is that right?
Correct. There's about a little over 4,000 companies. So very, very broad. But the one thing that I would say is, and I don't know if I can share this, can I?
You can do anything you want. This is America, Craig. I know some of you guys in Minnesota think you're Canadian, but this is the good old US of A.
You're the best.
Happy Canadian Thanksgiving, by the way.
Oh gosh. Let me throw this up here. Hang on.
We don't need you throwing up around here, Craig. Settle down.
Trying to get it right. See here. Here we go. I think this is what I want. No, I want this. The entire screen is what I want right here. All right. Now, let me come back over here.
Greg Johnson is quite the technology guy. Underrated because, you're a legendary technician in the space, right?
Correct. Should I bring the screen up right now?
Yeah, throw it up.
Look at this, right? How do you say I'm not forward cutting on technology?
Nerd alert.
Look at that, huh? I mean, this is the best way to look at charts if you're going to look at charts, my friend.
Is it heavy, Craig? Is it heavy on your neck?
Some of us work out for a living, right?
Get out of here.
Come on. No, it's not bad at all.
Right.
But it is a great way to read the paper and do charts. See this chart I put up on here?
No. I see a spreadsheet.
You see a spreadsheet?
Yep.
Hang on. Let me go back. Stop sharing. Let me go to a different screen.
Yeah, it was all your payroll. So thanks for that.
Probably is true. Here we go. I want to go to this entire screen, which is right here. And I'm going to share that screen. And now I'm going to put this up. Right here. Now you see this? Spencer, you see that? All right. So the point is making with this particular chart is it's unbelievable with the market making all-time new highs in here that if you look at the average stock, you're not even close to making new highs. And this is part of the conversation I've been having with people to say, this is where I think the SMID and mighty stocks, so more of the SMID cap stocks, are going to be some of the leadership going forward. And I do believe that we are entering a period that is very, very similar to what we had seen back in 2012 and 2013. And JC, you're a chart guy. You're a chart guy. So what was the most significant thing about 2012 and 2013? Putting you on the spot, my friend. Because not even had a single portfolio manager literally in the world get this question right.
The S&P 500 broke out above the dot-com bubble highs and the great financial crisis highs?
You're the only person who has gotten that right.
Yeah, but it's like cheating because I actually do the work.
I 100%, but I'm just telling you, I've gone into accounts, they run billions of dollars, JC, and nobody has gotten that correct. So
because they got their heads up their asses, Craig. They're looking at the wrong things.
They need to be looking at charts, but
That's
was
right.
The most significant thing for 2012 and 13. And again, I think we're in a phase that may not be exactly the same, but is going to rhyme. And when you look at the advance we saw with the average stock in the market through this period, and you just watched your breath measures just oscillate, got jammed up, pulled back, jammed up, pulled back. These are the big dogs in the market that are reallocating and repositioning inside of the market. We're doing that now. Couple that together, JC, with the fact that the Fed is now cutting rates. We've got a normalization of the yield curve that's happening. This should be very, very positive for financials, should be positive for industrials, and it should be a positive for a pure broadening of this market. Keep in mind, JC, that the Russell 2000 went up 37% in 2013 after that topside breakout of the 00 and 07 highs. Fantastic.
Mr. Craig Johnson, we can let's take a step back. You could take that off, Spencer.
I
So
had one
here's
more for you.
oh, go ahead.
Can I? So everybody keeps talking about
Back to the spreadsheet.
back to the spreadsheet. This is not my payroll. This is your payroll. But when you go back and you look at this 2-year bull run off of the lows, everybody recognizes NVIDIA, right?
I'm still looking at the spreadsheet.
Yep, that's good.
Okay. Go ahead.
Yep, when you go through here and you start looking at, these are the best performing stocks coming off of the lows of 2022 to where we are now, right? How many people were thinking about GE? If you weren't looking at the charts, you missed it.
Yep.
But GE was literally, in the last 2 years off of those October lows, literally the 6th best performing stock, up 374%. People missed it. I mean, when you think about the Mag 7, only 2 of the Mag 7 stocks, NVIDIA and Meta, made the top 50 best performing stocks coming off of the lows of the last 2 years. It's incredible. It's incredible that people have missed these pieces. And that's the point I'm trying to make to people is, and to your point, how are you going to identify these new trends, these new things without looking at the charts? The answer is you're really not. I mean, people don't realize that 50% of all the equities, all the equity dollars right now are ETFs. Valuation doesn't matter. Trend matters. A lot of money's being run on factors. Okay, that's fine. But it's not about valuation. It's about trend. It's about looking at the charts.
So when people, because I don't know who's more of a smartass, you or me. I know me. You think?
You win for sure. Come
It's
on.
a high bar you're setting, though.
I know, but
All right.
I'm just saying.
All right. The chat is chiming in on our smartassness on both of us in this case. So when people are like, "Oh, valuation matters," like, and they're very sarcastic about that. As it turns out, it's not. They're just lying to you. It actually doesn't matter.
Well, I mean, JC, you've done this for how many years?
21, I think.
21 years. Have you ever heard of anybody say, and again, I asked the people in the chat too, have you ever gone and bought an ETF and said, wow, that's a cheap ETF? Have you ever looked at the PE multiple on an ETF? Anybody? Again, I'll play the smart ass. I'll take the rein on that one, but I'll ask anybody here on your show, you ever looked at a PE multiple before you bought an ETF? I think the answer is no.
That's right. Tell him, Craig. Tell him.
Right. So at the end of the day, charts do matter. And charts are the most important thing. Because even when I go talk to all these quantitative people, and again, I've got a lot of quantitative people I have conversations with, and guess what? They all talk about a 12-month rate of change. Well, what is that? I'm basically buying stocks that are making 52-week new highs. Like
relative strength, momentum.
They could all be, they're all closet technicians.
That's right.
They sort of mask it all together, calling themselves a quantitative.
What are they so scared about to admit it? What are they like? Are they just like fraidy cats? Like they don't want to admit that they're technicians and are analyzing price behavior like responsible investors? Like what's wrong with that?
I don't know, but at the end of the day, nobody values their, nobody looks at their portfolio every day and says, wow, it's a cheap portfolio. No, they look at it and say, how many dollars do I have in there, right?
That's right.
You can't eat PE, right? You can only eat the dollars that you make.
Could you imagine what kind of serial killer you need to be to dilute something as factual and pure as price with something as arbitrary as an earnings estimate, Craig? I mean...
It is unreal to think that a lot of people are simply selling some stocks in here right now because they quote unquote look too expensive.
It's right? The numerator, stupid.
Correct. At the end of the day, this has been a 2-year bull market, and I can't tell you how many people have been fighting this bull market. And again, when you come through and you say, why can't you make your payroll? Why can't you, make the dollars that you want to make? And then you come through and you're like, how many people bought Fair Isaac up 401% off of the lows? There are so many of these stocks that have been doing well that everybody's like, oh, it's too expensive. I can't do this, right? Like, again, ETFs, nobody cares what the valuation is on an ETF. It's a theme, it's a concept, and it's the trend, and you want to play that.
I love it, Craig. Let me ask you this. So if you were to look back at all the bull markets in history, and I'm the kind of person that does that sort of thing, as are you, this one, if it were to end tomorrow, it would be both below average in terms of returns and below average in terms of duration. So it would be weird historically if the bull market were to end now. With that being said, when you look at the Dow Jones Transportation Average and you look at, say, the small cap 600 or the Russell 2000, what is the likelihood of this bull market coming to an end before those groups even break out?
So, let me answer this question this way, but before I do, I got to give a shout out to Guy, right? Like, guys here on the show love Guy. He's exactly right. They're trying to justify their PhDs out there, but a lot of, Guy's great. Love him. Lots of respect for Guy. Now, coming back to your question here, JC, I'll just say this. When I go through and I look at all these different things, one of my former colleagues on my team, Adam Turnquist, great guy, he talked about in one of his notes that the Templeton quote, right? Markets are born on pessimism, they mature on optimism, and then they ultimately end in euphoria, right? You're nowhere even close to euphoria at this point in time, okay? I think you might be entering the optimism phase.
Well, don't you need bulls to buy stocks and to have a bull market?
Well, you do, and you're getting more people that are starting to become bullish, but they're not euphoria by any range.
VIX is at 20, Craig.
Doesn't matter. It's
newsletter writers, bullish newsletter writers fell off a cliff in August. Like the biggest rate of change of bullish newsletter writers since the 1987 crash, for goodness sakes.
Step back and just look at trend. When you step back and you just look at trend, the trend is still up. And whether you're looking at small cap, mid cap, or any of these pieces, like, you are still not having any sort of indication that this trend is over. And then let's step back and I'll go to the ugly valuation growth rate terminology. And when you ask about this cycle overall, right, you go all the way back in time. This is the start of a third year of this bull market. And you've got 15% earnings growth with the S&P 500. You go down cap to the mid and small, and you're probably in the high teens to low 20s between the 400 and 600. I haven't seen in a third year of a bull market where the Fed is cutting that it is over in the third year. Okay. So is this market going higher? Absolutely, it's going to go higher. When I go through and I do my bottoms up point and figure model and everything else, yes, I see upside. I'm at my 5,800 year-end target for 2024. Those things need to be sort of revised, and I will revise those numbers literally next Tuesday when I publish our October Informed Investor, JC. So if you want me back on next Tuesday to come lay out some new targets for the market,
I would love you to. Come on in.
We can certainly do that. But there's a lot of cash that still needs to come off the sidelines, come into this market, and there's a lot of money that needs to rotate out of fixed income to come back into equity markets. And at the end of the day, right now, think about the world we live in. There is no better place to put your capital to work than the United States. And again, we've got two candidates that are running that are really not appealing for many different reasons at the end of the day. Okay. But at the end of the day, there's no better place to treat your capital than here in the United States. It's not going to be in Europe. It's not going to be in Asia. It's going to be here. The U.S. innovates, China replicates, and Europe regulates. And that is the global world that we live in.
Dude, you would make a great rapper.
I could, yeah.
Like if you were from like Harlem or like maybe like East LA, you would, and not from like Minnesota, you would be a great rapper. Like you're just dropping just bars.
You got to step up. You know what? Nobody remembers the dull and boring. And you know what? I always learn from this gentleman right here over my shoulder. This gentleman by the name of Ralph Acampora. You got to have something interesting to say. It can't just be a boring sort of monologue of conversation, because charts are exciting, but they're not that exciting. They're price. So you got to put a little color to it. You got to make it sort of interesting.
The legend Ralph Acampora also said, "Don't fight Papa Dow."
Correct.
And you know what I used to do when I was young and stupid? is that I used to fight Papa Dow all the time because I was an institutional guy, and I was Mr. Cool Guy, how everybody's benched to the S&P, and I was that guy. What an idiot I was. And I had Ralph Acampora, JC, don't fight Papa Dow, don't fight Papa Dow. Boy, has that stuck with me. Boy, has that helped me. Can you speak a little bit to that?
Yeah, I mean, at the end of the day, when I do my bottoms up model to figure out where this market should go, I learned a technique from Ralph, who learned it from another gentleman by the name of Ralph Rotnam. Okay. Yep. And I like to do point and figure charts on the Dow. I like to sum all those things up, divide it out by the Dow divisor. And guess what? You get a pretty good estimate of where the Dow should go. If you want to figure it out for the S&P or the NASDAQ or anything else, just take a ratio.
Yep.
And you're good enough to go. Because if you think about what is in the Dow, the composition of it, it's basically every stock in the Dow is probably in the top 50 stocks of the S&P 500. So you can kind of use it as a proxy. And again, my mom, every day I drive home, I call mom, which everybody here should do, call their parents, And she goes, did you see what the Dow did today?
Nice.
And I go, Mom, I only have 15 monitors on my desk. I have no idea what the Dow did for the day, right? But again, I entertain the question because she likes to kind of be like, oh, that big move in the Dow, woo, But the Dow is very important, and it is a good proxy and a good indicator. The only thing that we need to watch between the Dow and the Dow Jones Industrials is the transportation index, which has certainly been a little bit weaker as of late. So we got to watch those divergences to see how that plays out. I don't think it's going to be a concern right now, but keep that in mind as you look forward into 2025 or 2026.
I used to have a model that was super bearish. She was terrible. We had to get rid of her. From a seasonality perspective, Craig, correct me if I'm wrong, but we are entering the best 3-month period of the year, November through January. Everybody's always talking about sell in May and go away, but you have to remember to buy in November. You got to buy in October and get yourself sober. All of these things, what do they mean to you?
Well, I agree. We are entering a stronger seasonality period of the year. Coming out of September, October was certainly stronger, and then getting, even more constructive from there. But let me show you one more chart. I think I can do this more efficiently this time, JC.
Yes, thank you, sir. May I have another?
Exactly. So take a look at this, right? Oops, let me get there. Let's put a little history lesson into play and look at SMID cap performance during election years too. I mean, small mid-cap stocks tend to outperform as you go from the August timeframe and then accelerate as you get through the election. Like this is where your mid-cap stocks are going to outperform. So those stocks in the, call it $2 billion to $10 billion bucket are probably where we need to be thinking about buying things in here.
What do you make of the seasonal strength despite what should be a weak time of the year? What does that mean to you?
Well, usually that means we're probably going to continue to see it go higher. But if I go back and look at the seasonality, if I go back and I look at the seasonality coming through here, it should only get stronger from here. October, November, December. That is a historical record going back to 1928. So we're on the right track, and it's probably going to get stronger.
I would agree with all of that. Now let's flip that on its head, right? One of the things that you and I think that we do very well, both of us, is think about the circumstances. What are the types of things that it's going to take to invalidate this thesis that you have? When you get to work on a Monday or whatever, it's like, what should we look for that would suggest that perhaps things are changing and what I thought was happening is in fact not actually happening? Like, what are the things on your radar?
Well, if I had to go through my sort of top list of concerns out there, number one is none of us can predict what's going to happen with the election. Number one, right? Like we can guess, but we don't know. And if we come out of this election, and I do worry, JC, that if it is a Trump win and a Republican sweep through Congress, okay, and I'm not here to play politics, I do think you will have protests. I think you will have some violence crop up in this country, okay, period. I think it's a Democratic sweep. I think you'll get the same sort of outcome. So I think your best scenario ultimately with the election is Trump or Harris, flip a coin. I don't think it matters. I mean, the gentleman running the White House right now, God bless him for putting in as many years of public service as he has, clearly has an advanced form of dementia. Okay. So it really tells you it really doesn't matter who's in the White House, period. Okay. But I think a split House, split Congress, split White House, a combination of split government ultimately will be the best for equities, what I'll be watching. The other thing that we cannot predict is what's going to further happen in not only Ukraine, but also in the Middle East. I mean, these are geopolitical wild cards that we cannot put our fingers on whatsoever that could derail this sort of seasonality, this sort of viewpoint. But what markets do and investors do, whether it's individual day traders or institutional investors, is they tend to sort of take the process of, unless there's a disruption to oil fields, unless there's a disruption to shipping, unless there's those kind of events happen in the Middle East, they're going to sort of keep calm and carry on unless there is some sort of true disruption that is seen, because it is not paid to purely just go to the sidelines and sit in cash unless there is some sort of rollover in the a rollover in our technical indicators. And right now, that's not happening. Right now, it's all systems are like constructive. The trends are up, and we want to continue to be in this market, especially in mid and small cap stocks.
Yeah, no question. You talk about sentiment. We talk about the volatility index, just no evidence of complacency there whatsoever, or any sort of optimism at all, or excessive optimism for that matter. However, credit spreads are as narrow as they've been, like, I don't know, ever. Like, I mean, credit spreads are tight like a toiger. At what point are they too tight and must widen, or should we not overthink that sort of thing? Talk to me about credit spreads.
I clearly would not overthink the credit spread. And the reason I say that is we've done the analysis, we've gone back, we've looked at this through time. And I guess what I would say is, even if the credit spreads were to widen in here just a little bit, you're still at some very sort of historically, and let me throw this up too, you're still at very narrow levels, and you would have to see credit spreads go up a lot when you come back and you look at history to say that, here we go, to come back and say that this was becoming a problem, because right now there is no indication this is an issue. So
come in there, Spencer.
So therefore, at this point in time, thinking about high yield versus investment grade, there aren't really any cracks that are showing up. So this is not going to be some sort of great financial crisis. That's not looming. Credit is not an issue. People trying to play up the discussion that the consumer is broke and they're going on to borrowing. Again, I don't get the sense that is the case. I think a lot has been learned over the years. I think these banks are in pretty good position. And with the normalization of the yield curve that's happening right now, positive sloping, that we are at a point in time where equity markets are going to continue to work. And I would not try to overthink this and be negative. Come back and keep looking at, as Ralph says, pop it out. It still is working. It's still making new highs. You're still making higher highs and higher lows. And that is the most straightforward, simple message that I guess I would say to everybody listening today is there's opportunities to be made here.
Craig Johnson, you've given us a lot of your time, and I appreciate that. Not to make your head any bigger, but you're kind of a big deal, right? You're very, very well respected analyst on Wall Street.
Humble and hungry.
Have for many years. Mad respect. But last question, we're going to take a step back, because despite all of your success and your notoriety across the street all over the world, you were orange pilled early. You are a true degen, and I would be remiss if I let you run without asking for your thoughts on crypto in general, when Moon, et cetera, et cetera. Any thoughts?
Well, I am still very much a crypto fan, and I always will be, because we've got $36 trillion in debt in this country, right? And if you look at Afghanistan as a very simple example, when the U.S. had their unruly exit out of that particular country, you did start to see cryptocurrency start to come in and start to fill that void. And I think that there is a mechanism future here. And I think if there is to be a Trump victory, I think your cryptocurrencies will do really well under that scenario. Because again, we need to deal with this 35 to $36 trillion in debt. If I just look at the technicals of just Bitcoin as an example right now, we're getting very close to wanting to break out above that $70,000 level. I think there's still lots of room for these cryptos to work. It just may not be today, tomorrow. It might be 3 to 6 months from now, but they'll do well. And there is definitely room for these cryptos to keep working. Again, I still have the machines hooked up, and when the prices get to the right level, I'm happy to turn them back on and heat the house and do all those things. Winter is coming, JC.
Winter is coming. We just had a little bit of a Solana summer, but no, I get it. Mr. Craig Johnson, ladies and gentlemen, give it up for Craig Johnson. You are the man, Craig. Let me know next time you're in New York. Dinner on me.
Hey, by the way, perhaps I'll see you in a couple months at the CMT event coming up down in Miami. Or not Miami, in Tampa.
Sure. Get to the deets.
Perfect.
In.
All right. See you guys.
All
Have a
right,
great
Craig.
day.
Enjoy. Craig Johnson. He's the man.
Oh yeah.
I know we say that like about a lot of our guests, like, oh, he's the man.
No,
but like
he's
for
cool.
real though, like Craig
He's
Johnson,
cool.
like legitimately is the man. Like both market wise and in real life.
Yeah, he like didn't he like was it last year he like drove his truck on his lawn just to see how it would handle the snow. I think that was Craig. Right?
Sounds about right.
Yeah.
Dude's been mining cryptocurrencies since before I knew you could mine for cryptocurrencies.
And no, we're actually not going to get Craig on the show next Tuesday because we're not going to do a show next Tuesday because certain people I know are going to be in California for
we're going to be gallivanting on the West Coast. It's the best coast. Man, I love California. I love it. I really, really do. I mean, and some people like the hardcore Republicans are like, JC, how do you deal with those people?
Those people.
You don't. You just whenever you don't want to deal with these crazies, just go to a taco stand. Just have some tacos. That's how you deal with those people.
So they give us a presentation slot. It's called Charts Gone Wild. These people know damn well what we do. They know we're going to show up with 500 slides. Do you see how much time they're giving us?
How much?
How much time did you get?
25 minutes.
Well,
what are we going to do with that? What am I going to do?
Well, what we're going to do is we're going to keep going longer and piss everybody off and go another 10 minutes. And you want to know something? The host might be upset, but the audience will tell us they want more. So don't worry. I got this. Not my first time.
We're following Darren Rovell, which I
was
think
that a low bar or a high bar?
I thought that was cool. I thought it was kind of a big deal.
I met Darren Rovell. I met him a long time ago, actually. He doesn't remember that, but yeah.
I'll tell him.
I am a hardcore like sports memorabilia junkie. I have so much cool shit. So for me, Darren, what Darren Rovell does is cool. He's got some really cool things.
I'm gonna ask him how much my Joe Montana rookie cards are worth, because that's the guy to ask, right? That's the world that he operates in, right? He's like the big card guy.
Yes, but depends on the quality of those cards.
Mint, dog. I know how it works.
Mint.
Doubt it.
All right. Before we bring Sean on, did you want to talk about Robinhood, Steve? I thought you did, right?
No, I wanted to finish the conversation about the banks. Did you want to throw up the chart of the banks and the Trump odds? And Stanley Druckenmiller gave an interview on Bloomberg yesterday that everyone's talking about. We've been up here. You could roll your eyes all you want, Spencer. I've been saying
I didn't see what he said. That's all.
For 2 or 3 months now. What have I been saying about the banks and what it means for the election?
Yeah, you've been on this. Yeah.
Banks are pricing in Trump. They're trading with Trump. So we have a chart of KRE and Trump.
Talked about this yesterday.
Stanley, I know, but Stanley Druckenmiller, who is a market wizard that you probably want to listen to as much or more than when any person in human history talks about the market. I want to listen closest when someone like Stanley Druckenmiller talks. And he said, the market is pricing in, let me see. Let's read exactly what he said here. I don't want to misquote the Stanley Druckenmiller. So this was on Bloomberg.
No, where did the chart go? Bring it back.
I must say, the market and the inside of the market is very convinced that Trump is going to win. You can see it in the bank stocks. You can see it in crypto. You can even see it in DJT. We've been talking about banks. We've been talking about crypto. We've been talking about how the market priced Trump in a big way and then priced Trump back out when the banks sold off, right? And you can see here the predicted odds moving with the regional banking index. This is the best information that you're going to get about who's going to win this election is KRE. It's not predicted. It's not poly whatever. I don't know, look at that thing. It's definitely not the CNN or Quinnipiac polls. It's 100% not going to be the Marist poll because I don't know what the hell happened there. It's the KRE Regional Banking Index. That's going to tell you.
Did we ever talk about like why? Like what's special about the regional banks?
I've told the story so many times. There's going to be massive deregulation coming in and rolling back a lot of the Dodd-Frank financial crisis stuff. That's all it is right now. Because these companies deal with so much red tape. They can't do anything, right? We talk about like the rise of private credit and all of these private equity companies. This is business that the banks used to do. This is business that they can no longer touch anymore because they're being watched like crazy by regulators. Can't do anything. The banks today are so different from the banks 34. The banks were hedge funds back in the day. They were hedge funds. Think about it. Not anymore. Now hedge funds are hedge funds.
We don't need that. We have private equity, right? We have Blackstone.
The point is, if they don't let the banks do some of this, don't let the banks take this business, then it goes to the private companies for sure.
Yeah, we have Blackstone up 6-7% this morning.
I'm so long Blackstone, Carlyle Group. This is such a great theme right now. If you really want to get in and make a bullish bet on private credit, it's Hercules, HTGC. I'm long a couple of these private credit vehicles. That's
Hercules.
Did you missed my whole rant? So you'll have to.
I didn't miss it. I was listening. It was great. You did such a great job, Strazza. You're so good at this.
Don't you like it when Stanley Druckenmiller agrees with me?
I don't care whether he agrees with you or not.
I'm more
interested in whether I agree with you or not.
You don't care what Stanley Druckenmiller thinks? Seriously though?
Why would I?
He's not one that like. I have a couple people, Tepper, Druckenmiller, like where when they talk, I'm like, I'm all ears, dude. I'm listening to everything.
That's great. I think he's great, but like what he thinks is not going to impact my decision making. If that's what you're asking me.
Like you have a follow list of market wizards and then a fade list. So like Ray Dalio comes on, Bill Ackman, like you literally just do the fucking opposite. Right, but if somebody like Buffett,
I don't know where do these people talk? Like at charity events? Like I don't even know where to listen to these people.
Steve, Bill Ackman does the opposite of what Bill Ackman says.
That's right, exactly. So you learn this over time.
But where are you watching these people?
Nobody fades himself more than Bill Ackman.
Same place I used to watch you.
Cable news.
Basic cable?
Spencer, help me.
Yeah, cable news, financial TV.
Yeah, I stream them. I watch them on the YouTube TV. What's wrong with
these? You know, on financial television, they're lying to you, right?
I told
you go on.
I told certain members.
Yeah, of course. I go right to the point.
I just told certain members of the analyst team that if they're not watching Jim Cramer every night, like, what are you even doing? There's certain value in watching these networks for what we do. If we're going to come on here and talk about stocks all day, every day, guess what? By watching that network, not only do I know what's going on with the stocks, but like Cramer's show is so beautiful in a way where he spends 10, 15 minutes every night.
Are you being facetious or are you being serious right now?
I'm being dead serious.
Are you telling my analysts that they need to watch basic cable television? Oh, yeah.
Don't tell them otherwise. It's so true. It's so true. That was their reaction.
You understand watching that stuff like literally causes permanent brain damage, right? Like they're not going to recover from that.
It's going to be so great. It's going to be fantastic.
Like there's certain networks you watch, it turns people into Nazis. There's certain networks that you watch, it turns people into communists. Like, it's not necessary. Put some music on.
No.
Put some music on. Oh.
Cramer has the power to move stocks.
Can we bring in Sean? Because Sean can bring some perspective on this nonsense that Strazza is spewing here.
Yeah. Well, all right. We can do that.
Please.
I know I'm right.
You are not. You are not.
All right.
Johnny baby.
Listen, I take credit for the great bull market that started in 2009, and it started for two reasons. Number one, I joined Twitter. Check my timestamp. Number two, I got rid of the TV from my trading office, and there's never been a TV on during the trading day ever again in my office. Strazza, you're crazy.
I get sad and lonely. So, but seriously, let me explain.
Again, psychological issues that this basic cable TV watching is causing. Look at Sean. Look how meta Sean is. Goes on hikes. You know, he's got the ponytail going.
First of all, Spencer's not here, but I know for a fact he agrees with me because he gets this. If you don't recognize, if you don't recognize the value in
he was a journalism major in school. They literally taught him how to lie to society.
What do you spend 30 minutes doing every day? Interviewing someone about financial markets. Don't you think maybe if you watch like the pros who are like giving great interviews on the television all day and that's their job and they went to school to learn how to give a right interview the right way, like you don't think you could learn anything from these people?
That sounds fucking horrible.
No. You don't think Jim Cramer coming on and spending 15, 20 minutes deep diving into a stock or detailing some big growth name and telling the story can benefit us when we're writing deep dives and trying to tell the story about these stocks?
I think it can only hurt us.
Maybe I just care more about my job. I don't know. It helps.
I think that you don't care enough. That's the problem.
And he's gone.
He's gone. Mr. Shawnee baby. Sean likes this bull market. Sean likes owning stocks in bull markets. But with volatility where it is, and we are in the middle of earnings season, there are landmines, there are high-priced options. There's a lot happening here. How do you think through this in this type of market environment, Mr.
I think
Mr.
through it
Shawnee?
on a case-by-case basis. You know, I mean, when we have a volatility index VIX hovering around 20, obviously that means that there is premium to be sold if you want to do that. And I'm not afraid to do that. But I feel like this market, we've been talking about it for weeks now. I mean, this feels like the broader stock market's on the verge of another leg higher, and the opportunity is to the upside. And I think we need to be aggressively playing for the upside. We're seeing so many stocks breaking out, so many sectors. It's not just one sector, JC. You know that. It's not just tech. It's not just communications. There's lots of sectors breaking. I mean, hell, we got into an energy play yesterday. I mean, there's all kinds of stuff that looks great. And volatility is high, but that's not uncommon when we're in the, basically the beginning of earnings season. That's par for the course.
Cameco looking like it wants to break out of this base and new, so when we talk about energy, it's not just oil and gas. There's other energy out there that's working, right, Sean?
Yeah, I mean, Cameco is a nuclear play, right? We were talking in our analyst meeting yesterday that we wanted to get some exposure to the picks and shovels of the AI boom, right? It's not just going to be the big names like Microsoft that benefit from AI or the semiconductor chips. I mean, those are the obvious names, right? But there's a lot of downstream companies that are going to benefit, and one of those could be nuclear power providers. We're already seeing the big players express interest and even sign some contracts recently for smaller nuclear energy options because AI is power hungry, like most things these days. It seems like.
You want to throw this one up here, Spencer? Here, the new slide 2, please, sir.
The new slide 2.
The new slide 2 for you bingo gamers. How do we feel about this?
Well, you know how I feel about it. I'm positioned long.
I want you to tell me how you feel about it.
I put on a longer term trade than I normally do. People who know me know that my typical trades have a time frame of 3 to 9 months is kind of my sweet spot for options swing trades. This one we went a little bit longer because, as you could see, that's a big ass base. But a big ass base that goes higher needs time, right? So I went out further than I usually do, and
Can you tell me again about the big ass? What was it?
a big ass base needs
it.
more time to go break out into space.
All right, I like that. I like that. Big ass base.
Yeah. So we positioned longer term than we usually do, but I have a strategy where I'm going to kind of pay myself or hope to pay myself a little bit to ride this position, keep reducing my cost basis as we go. One of the beautiful things about options, lots of different ways to play a thesis that you have. You know, it may be a little bit more high maintenance than some of my other trades, but that's okay. I can do it. You can do it too. It's all good.
Some of these big asses can be high maintenance as they continue to prove again and again. Sean, you know, in the middle of earnings season, and you think about like landmines, and you see that volatility going into the earnings, and then you get that volatility collapse in terms of the implied volatility in the options market, of course. You know, are you looking to, buy dips post earnings in strong uptrends? Are you looking to play these names going into those earnings and withstand that volatility? Like, how are you thinking about that sort of thing?
Yeah, that's a good question because my attitude around earnings events has kind of evolved over the last few years. I view earnings events now as catalysts for continuations of longer term trends, right? I'm not coming into an earnings event thinking that everything's going to change coming out of this earnings event. And I know a lot of people like to make headlines saying that this is the most important earnings event ever or most important earnings season ever. I don't buy any of that. But I do buy that when a stock is in, let's just say, an uptrend, it's been in an uptrend, and maybe it's kind of consolidating heading into earnings, I feel like the odds play is that getting earnings out of the way is just, maybe one of those things that's been holding the stock back. And finally, once earnings is done, now we can resume our regularly scheduled uptrend and go higher. So I'm looking at earnings events as catalysts. And so I'm not necessarily shying away from stocks that have earnings. I might not put a position on the day before earnings. But JC, we've been doing this a long time. There used to be a time where I would look at the calendar and be like, oh, this stock announces earnings in 6 weeks. I don't want to trade it. I'm not doing that anymore, JC. I'm using that as a catalyst. And, we could be wrong. And we've been wrong before. We'll be wrong again. But you know what? With options, when I can define my risks, then any loss that I suffer, whether it's because of earnings or not, they're all still the same size. They all fall into the same bucket. At the end of the day, when I look back at all my trades at the end of the year, all the losses are around the same size, and that's just fine. It doesn't matter if it was earnings or not.
I love this about you, Sean. I actually gave you a shout out for this exact thing on the recess the other day.
Oh, thanks,
Sean.
buddy.
Sean has a knack for also just knowing when to maybe be more aggressive, when to press the gas a little bit. It just kind of changes behaviors based on the environment. And I know that this is something you're planning to stick with. It's not based on the environment, but the open-mindedness of you just inspires me.
I agree.
Well, thank you. Thank you. When you've been in this game long enough, you got to be flexible. I'm reading a book. JC or Strazza knows this. I'm reading a book about Bruce Lee. Be like water, my friend. And he talks about how you got to be flexible, right? If you're rigid, then you're going to get blown over in the next big storm, right? You got to go with the flow. You got to be willing to change your mind. You got to be willing to adjust your strategies to meet whatever the market is offering.
Like a palm tree.
Yeah, like a palm tree. Or you could call it what VP Handler just said. I'm not going to say that on air, but or you could say that.
Hey, you know what's going on in this market though? Some big candlestick energy.
Big candlestick energy. I like that, Strazza.
Big stick
Yes,
energy
sir.
out there.
I like that. Did you guys know that Cameco was from Saskatoon, Saskatchewan?
I did. I put that in my note yesterday.
Saskatchewan Roughriders of the Canadian Football League, my favorite Canadian Football League team. I know you're an Argonauts guy.
I think we've got some clients from up there in Saskatchewan, don't we?
Shout out Saskatoon.
One of the coolest city names of all time, Saskatoon. Up there with Medicine Hat.
Saskatchewan.
There's a famous reference in a Warren Zevon song, right? The hockey song about Saskatoon. He's always singing about Canada.
I don't know.
Shout out Canada. I didn't realize that Tim Horton was such a famous hockey player. Dude was a stud, huh?
Played for my two teams, the Buffalo Sabres and the Toronto Maple Leafs.
How about that? Shout out Tim Horton, eh?
Hey.
Guys,
Hey.
I have a question. Slide 1.
Slide 1.
Slide 1 or 2?
Ooh.
So WGMI stands for we're all going to make it, from what I understand, if I'm paying
Stands for
attention.
we're going to make it. There's no A.
We're gonna make it.
We're going to make it. Yay. Okay. Are they really
Sounds like
going
an
to
80s
make
TV
it?
show.
Like, are the Bitcoin miners really going to, are all of them going to make it?
No.
I don't know. I don't think so, right?
All right. Luddite alert here. I don't know much about this space, but wasn't the play in miners years ago when there were still lots of Bitcoins left to mine? There's not many left to mine, are there?
There's still plenty.
Are there?
They're
I don't
keeping
think
busy.
it's like, yeah, they don't get to like that number for a very, very long time, from what I
They
understand,
should
right?
take all these shitty bank locations and turn them into Bitcoin mining operations.
No,
I
that's
saw
what
that
I'm
headline
saying.
about all the bank branches closing. I couldn't be happier about that.
No, but I
Me
don't
too.
think, but that's my point. I don't think you put a Bitcoin mining operation or big data warehouse where the banks are. You want that out like out in the middle
Yeah,
of
next to
nowhere.
the nuclear plant.
Yeah, exactly.
No,
I
for
don't-
real though. What's the nuclear plant in Pennsylvania that they're going to open up again? The one that blew up?
3 Mile Island.
3 Mile Island.
They should also put one up by Niagara Falls. Lot of energy there.
Yeah, that's true. Shout out Canada. So many Canada shout outs.
No, they'll build it on the U.S. side because the U.S. side of Niagara Falls is shit, and that's where all the factories and ugly stuff is. The Canada side of Niagara Falls is beautiful.
No,
Don't
you're
mess with
right.
that.
You're right. It's called Buffalo. It's a
No,
terrible
it's not
place.
called Buffalo. It's called Niagara Falls,
Terrible
New
place.
York. Different city, different place.
Nah, I don't think so. I think it's the same place. I know it well. Dude, one time we were in my sophomore year, we were playing against Niagara because they were in our same conference, right? I played baseball at Fairfield. So we had like man on like first and second or something like that. There were 2 outs and we popped up in the infield, right? Infield pop out. There was so much fog coming in from Niagara Falls that the ball completely disappeared. There were 2 outs, so our runners were running all over. It was just keep running. The ball completely disappeared. It literally fell right in the middle of the infield. We scored a whole bunch of runs. It was like a triple or something like that. They called the game immediately after that. But that place still stands in the record books.
Fun fact, I was accepted to University of Niagara. I did not go there, but I was accepted there.
Our coaches used to tell us, be like, whatever you do not cross the border and go to Canada. And then when we'd be pulling into the hotel on the team bus, there'd be a line of cabs outside waiting to take us to Canada.
He told you that because that's exactly the thing you are supposed to do.
That's right. That's right. It was, but you know what it was? It wasn't so much that we're being irresponsible, even though we obviously were. It was the first time that like the whole team could bond together because the drinking age in Canada was 19 back then. I don't know if it still is. So like all the freshmen would get to come and the sophomores and hang out with the seniors and everyone's together. And it's like Canada. So like there's not a lot of rules going on around there. So.
And everyone's
Good
so
time.
nice. Everyone's so nice up there.
So nice. I freaking love Canadians.
You know who's really nice up there? The strippers. Strippers are really nice in Canada.
I wouldn't know nothing about that.
Sure you wouldn't.
Let's do it, Spencer. Hit it. I just want to, so I tried to do the Perlman fast the other day.
Oh
This was
yeah, I wanted to
on,
ask you how that went.
on Tuesday, right? Tuesday? Today's Thursday. Yeah, Tuesday. I tried to do the fast. And you want to know something? I was going to make it. I was already at like 24 hours or 23 hours or something like that. I made my family dinner. My kids were so well behaved. I mean, they're usually pretty well behaved, but even better than normal. Everybody was sitting down at the dinner table. We had fresh steaks, vegetables, the whole thing. And I'm like, what a dick I am if I don't just sit with my family and eat dinner right now. Like, this is so beautiful. I wasn't even hungry. It was
This
just
is
like
the
it was
most
just
JC comment ever.
it was such a nice moment to sit with my family and have a dinner. I wasn't even hungry. I was gonna do it, and you know what? I ate the meal, right?
So
but
you
you want to
are-
know something? But tonight, hold on. Tonight, the daughter has cheerleading, and the kids are going to the park, and they're not going to come back until it's time for them to go to bed. and I got our mid-month conference call for premium members tonight at 8:00. So there's going to be no nice family dinner happening at all. So I don't have to feel guilty about it, and I'm going for it.
Okay. I was just going to say, the only way this works for JC is we got to get him like out in the woods somewhere for a long weekend and just isolated, nobody around, forced isolation. That's the only way.
I challenge you to actually do it. I think it's really admirable that you just decided in your own head that you achieved it and marked it a win and then went and ate anyway. But
I didn't achieve. First of all, I gave myself the under. I didn't think I could do it. As it turns out, I proved that I could do it.
How did you didn't. What makes you think that you proved that
you didn't prove it? You didn't
because I
prove it.
wasn't starving at dinner time. I wasn't even hungry. I was fine.
This is next level crazy.
Hey, why don't we? We're all going to be together in Coronado this coming weekend. Why don't we do it then? All three of us do it together.
Dude, with the amount of tacos and burritos that are going to be around me, no.
I'm going to eat like a king next week, Sean.
Dude, I'm having chilaquiles for breakfast. I'm having midnight burritos. The answer is no.
Ask me about my third dinner. Don't ask me about fasting next week.
Yeah, fasting in San Diego.
I take the under that JC's going to be up after 10 p.m. while we're out there. I take the under.
I've been more responsible. In the old days, I would be out till 1, 2 o'clock in the morning in Coronado, but
you and I are cut from the same cloth, JC. But
I
take the under that both of us will be.
Yeah, I don't need to do that anymore. I used to. I'll let the kids stay out late.
For all you watching who are going to be in Stocktoberfest, if you want to hang out with me and JC, make sure you do it before 10 p.m. because after that, both of us will be asleep.
Yeah, I'm with Sean on this one. I'm with Sean on this one.
No, Strazza will be up till 3 a.m. But you and me, JC, we'll be done by 10.
The chat wants us to invite Sarah Eisen. True story. So we're at dinner. We're at Barry Ritholtz's birthday a couple of years ago, and you got all these people. You got Nobel Prize winners in there. You got me and a bunch of my other friends cracking jokes and whatnot. Sarah Eisen sitting there the entire dinner, not saying a word, wondering what the fuck she's doing at that dinner. Like she was so nice, she was so sweet, but she's like, why am I here? Who are these people? She was sitting right across from me. She didn't say a word the entire time. Oh, good times. Shout out Sarah Eisen.
She's great.
She's probably not alone in having those thoughts from time to time when hanging out with you guys.
She probably hated it.
Definitely. She's like, why am I here? Like, this is ridiculous. Everybody's yelling at each other.
Yeah.
What's that Nobel Prize winner who's always like really angry? The one that said the internet was a fad. He's always bearish. What?
Nouriel Roubini?
No. I don't think he won any Nobel Prizes.
I know.
That guy throws great parties. That's for another recess.
Oh, Nobel Prize. I'm sorry.
Yeah, Nobel Prize. What's the guy's name?
He's the one who throws hot tub parties, and there's 10 girls for every guy.
What?
Dude, I've been to Nouriel Roubini parties. I remember telling my wife now, my girlfriend at the time, we had just started dating. We were only together for like 6 months. I'm like, okay, we're going to go on a field trip tonight. Yeah. Think about it like going to the zoo. We're going to go to one of these parties to see how these people behave. Like, that's how I explained it to her. And then I brought another one of my boys with me, Joe, and it was something, man. It was like.
Does this happen in Miami?
Like city parties?
This kind of thing happens in Miami or the city?
First of all, this dude's crib in the village is like 4 floors, balconies everywhere, all kinds of stuff happening. It really was like going to the zoo. It's like, let's go see the bears. Let's go see the tigers. Let's go see, the cheetahs. It was it was something. Shout out to
like a bull market party.
Anyway.
Dude knows how to party. I'll tell you that. Say what you want about the guy. He can throw a party. Line out the door to the building.
All right, how do we get invited to the next one? I want in.
Who is this person? I don't even know who this person is.
Nouriel Roubini.
Oh, so what's
you
the
don't
guy?
Know who Nouriel Roubini is?
No, sorry.
It's not the. Anyway, we moved on.
We took a hard turn onto somebody else. Right. Okay, I got it.
So I just want to say, the Bitcoin documentary, JC, last year we talked a lot about the death of the crypto banks and the disappearance of Silvergate and Signature almost overnight. And we used to say on here, it was a little sketchy how that all went down. They weren't insolvent. They could have kept operating, but all of a sudden other banks were blowing up and the feds just went and shut their doors. They cover this and they talk about it in the same exact way that we used to on the new Bitcoin documentary. So
where do I find this? Where do I find this doc?
HBO. It was, listen, it's entertaining. I learned some cool fun facts. Wasn't great, but that was something that stood out. They talk
Choke
all
point
about
2.0. These communists and the government wanted to shut him down.
that's it. That's the true story.
It started with Obama. It continued into it's the communism. They didn't like it.
They told them not to do it. They did it anyway.
Nope.
And they said, nah,
Strazza's right. Yep.
All right.
Okay. Sounds like a worthy watch.
It's un-American.
Sounds like capitalism, right?
My homie lost like $6 million in a week. That's a lot of money.
Who did?
Anyway.
All
One
right.
of my buddies worked there and he got smoked.
Anyway, it is Thursday. What do we got today? We got the Breakout Multiplier weekly strategy session for those of you who will be there. We got the jam session with Sean at noon. We got Chart Request live at 1. And JC, you're going to be recording a Mastermind Lab today or so, I hear.
Oh yeah, we are diving deep. We're gonna slow it down a little bit, Spencer. We've been moving fast, but we're gonna push everything back a week, and we're gonna focus in for another week on relative strength and intermarket analysis. We wanted to have one topic per week. Spencer's like, oh, we are doing this? Yes, we are doing this. I make the rules around here. We are pushing everything back a week. We're gonna lean into intermarket, lean into relative strength. It's that important. I don't think we can move on without that. I think it's irresponsible to move forward without further reiterating the importance of the relative strength and the intermarket analysis. And that's just how I feel about that.
All right. And then last but not least, tonight.
You should let people know that, by the way, Spencer.
Yeah. The mid-month strategy session for All-Star Charts premium members. If you are a member, you got an email a couple hours ago about that. So we'll see you guys tonight for that. And that's it, I think.
And the bonus, if you tune into that, you might see JC crack and eat a muffin or something because he's supposedly fasting.
My kids think that they watch cartoons. They think that they're the Muffin Babies. So they think the song Muffin Babies. They don't understand that it's the Muppet Babies. So in this house, it's the Muffin Babies.
Great.
I like it.
All right. Thanks, Craig Johnson, for coming on. Thanks, Sean. Thanks, Kenny. Thanks, chat. We appreciate you. As always, go make some money. All right.
YOLO responsibly.